What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I dive in to the big macro charts of the day and then take a look at 5 Zacks Rank #1 strong buy stocks that are breaking out to new 52-week highs. So, first and foremost, the S&P 500. Now, we all know the big run-up from Election Day, but really, what had been happening here for a while is this fib I was playing from. So this move from the April lows to the mid-May highs, and we drew our fibs down from there. Now the other thing I did though is I drew fib extensions. So what I mean by that is if you move in the direction of the previous move, that's a retracement. If you go past the top of the previous move, well, there's your extension. So when you're looking for price targets, you can use these fib extensions to give you areas of potential support and resistance. So what we did here was based off this, I saw the 61.8% retracement level provided some support. So we got this leg higher retracement. Then the rally sort of stalled out at the 61.8% extension of that move. Sure enough, came back down to retest the top area here, 2405-ish. And now we are beginning to extend higher again. So this is this sort of 1, 2, 3, 4, and now this is the 5th move higher here. I don't want to get too Elliott wavy on you here, but the moral of the story is that the market has blown through these fibs and is pushing to the upside right now. So we can basically take this and get rid of it because now we're in a whole nother plane of existence. Now what you can do, we could still mess around with the fibs. And we could draw the fib from here to here, right? This sort of previous high. And you can see it's sort of flirting with this 50% level here. Sure, I could make this more scientific and put in the actual values here, but that's what you need to look at, right? Just move higher, retrace here, and now we're looking for extensions. So the important part about that is because I want to find targets to the upside potentially. So here I'm going to add in a couple of targets. Now, with these extensions, the way that I got this, it's going to be a negative number here. So a negative 38.2 is going to be the 38.2% extension of this move. So we're going to go ahead and put that in there, apply, and you can see that that first level, 2492. So that's kind of the next target here on the S&P 500, 2492. Now, I think that you obviously have the logical resistance level at 2500, or the psychological resistance level there at 2500. That's awful close to that 38.2% extension there. So I think that is where your targets should lie. Now that's the S&P 500, my friends. But we've got much more than that. Let's take a look at the Nasdaq. So the tech wreck, right? You guys remember that? This nasty sell-off here. That one fateful Friday in June. And what happened was you had a Nasdaq that retraced down below the 50-day moving average for a few days. Now, that doesn't happen that often. If you go back in time, you'll see that since the election, barely ducked under it for one day, tested it but didn't quite get it, ducked under it for a couple of days, right? Gets kind of close but finds support, and then finally we just kind of break on down through it. However, the trend line, of course, I cheated and I just drew this, right? And that's the problem with trend lines. But now it's established itself that there is, in fact, this trend line that's down here. And then, of course, you have this 50-day as support. So right now, the Nasdaq is right back at those highs again. And we can just go ahead and forget about this, this little thing. Don't worry about that little thing. Just came under a little bit of pressure, and now look where we are. We're right back to the highs. We don't have to worry about this whole tech wreck, you know. Very important that the Nasdaq approach these highs. Now, a big chunk of that was the news today out of one of our original members of the band FANG, Netflix, ticker NFLX. touch on these guys real quick. And again, this is a situation where ended up dipping below that 50-day, coming under some pressure, but nothing fixes a stock like an earnings report, and if they're a solid earnings report, these guys are off to the races. So that's good to see out of Netflix and the rest of the Nasdaq. So I think that's why that's happening. Okay, so some key levels again to watch on this Nasdaq composite. We're elbow deep in it. We're at the all-time high right now. So we just got to see if this is going to follow through over the course of the next couple of days. It's going to be very important. We do have the commodity channel index right here that's overbought at $149. Anything above 100 is overbought territory. So it's a little something to be concerned about. But after dipping down below that zero line here for a little bit, I think this is nice and healthy. And you see just a few times, every time it just dipped below this negative 100 line was a buying opportunity all along the way here. So the fact that we chopped down below it a couple of times and now we're back above, I think what you're going to see happen is this CCI come down to the zero line and then bounce back up in a continuation pattern as this keeps on rocking and rolling. Okay. Another major sort of risk-off thing that I do like to look at is, of course, the dollar-yen. I've talked about this a lot. I don't want to beat the dead horse here, but you do have these fib retracement here from the November lows up through the December highs. Had a nice little downward trend channel that got put in here. Now they pulled a little rope-a-dope because the dollar-yen rallied above this level and then crept back down. And the reason why I'm talking dollar-yen is this is basically risk-on, risk-off, okay? Risk-on in the positive direction, risk-off in the negative direction. So what you're seeing here is after breaking through this trend line, it's in another trend channel here. Should not come as a surprise that selling came at this 23.6% fib retracement here. So I'm fully expecting, if there is support here, this would be great. So a rally over the course of the next couple of days would be fantastic. But keep an eye on the 112 mark for dollar-yen. If it breaks down below that, then we're talking 109s. Or this 108 level. It's going to get down into here, and then we'll have to see, because if it breaks down below that, then we've got some risk-off behavior happening, and the market's going to have to be a little bit worried. But as long as this is kind of ticking up, even if it goes sideways, I think things are going to be okay. Global risk-on sort of trade, so that's a good thing. Now let's go ahead and dig into some of these Zacks Rank #1 strong buy stocks that are breaking out to new highs, the first of which is AGCO. I'll let you take a guess at what these guys do. That's right, it's all agriculture products. So big tractors, high horsepower tractors on big farms. Think that big, heavy farming equipment stuff. No surprise that this was a Trump rally stock, really, right? Stalled out a little bit. Nice little retracement, and I'm pretty sure if I drew a fib on this, you're also going to have something pretty clear cut. Sure enough, you do. Entertaining down here at that 38.2% level before catching a bounce, and now it's moving higher again. So at 52-week highs, breaking out. Now what's the potential upside here where it's going to stall out? So first let's take a look at what happened with this fib from here down to the 38.2. So let's put the 38.2% extension on this one. Go ahead and fire this up at this level. Remember I said 38.2, so negative 38.2. Let's see where that is, and sure enough, that's right around the current price action. So if it can blow out the top above this 38.2% extension, then you've got the 50% extension as the next level of potential resistance for the stock. We can add that in here too, the negative 50. And you'll see that's a little bit higher up at 42.91. So approaching some resistance here in the short term, but still things are looking very good for Zacks Rank #1 strong buy stock, AGCO, ticker AGCO. Then we got good old ETrade Financial. They're the online brokerage, ticker ETFC. And as you can see here, a very sharp move into the end of the year. But then things have gotten pretty choppy. It's been in this consolidation range. But ever since May, had a lot of accumulation in shares of ETrade Financial. One indicator I like to use is this shaken money flows index. See the crossover in May. It's been positive since then. Little bit of a pullback here, cross back over the zero line, so that's okay. Overbought commodity channel index, came down to touch this zero line and then caught another bid and moved higher. So these are all nice bullish things happening here for shares of ETrade. If you're late to the game here, what you can do is you can use this previous high right around just under 38, maybe even underneath this range, so under 38 as a stop loss down here, and buy the breakout on shares of ETrade, ticker ETFC. And remember, this is a Zacks Rank #1 strong buy stock. I do want to have to show you this one, G14 classified right here, OraSure Technologies, ticker OSUR, and oh yes, what a ride it's been. Look at this big gap up February on earnings, and then since then has just continued to push higher. These guys do, there's a medical company that does fluid diagnostic products. So basically testers that use, your saliva or things like that. Really good thing that happened here is they pulled back to this 50-day moving average, found support, commodity channel index oversold, and then boom, they've rocketed higher. They've got some news from the Bill and Melinda Gates Foundation that they're going to subsidize their oral HIV drug in the developing world. So definitely a huge shot in the arm here for OraSure. That's ticker OSUR. Then you have Ryanair. So these guys are the Irish discount airline, I believe. Ticker RYAAY. And again, Zacks Rank #1 strong buy. After chopping sideways in a long consolidation from November all the way on through April, they've really caught a bid, surging higher from the the high 80s, sort of 87.50, all the way up to 115 here. So a nice little move. Even the pullback really wasn't much into their short consolidation above the $100 level. So things are looking very bullish here. And again, back to these money flows, they've been positive throughout the course of June, came down to the zero line and have bounced a little bit there. So this is all good. And then this is this pattern that you'll see again and again where stocks are in an uptrend. They start to shed a few pounds. This commodity channel index gets oversold. And then, boom, it's time to buy again as these things start to rocket back higher. So that was Ryanair, ticker RYAA. And I got one more for you, Ternium. That's right, Ternium, ticker TX. They do steel products in Mexico and mostly Mexico, Argentina, Bolivia, Chile, Paraguay, Uruguay, Colombia, and the good old US of A. So they're basically a Central American, Latin American kind of deal here. And okay, not for the faint of heart, because it is in fact a steel company, right? So you have these rallies and retraces that take place. There's a whole lot of rally and retrace action, but it has given you a few floors. So sort of below this $23 level was a floor, just like this was a ceiling here at 28. So you can see here by this horizontal histogram I have of volume that shows you that a big chunk of the volume has gone out at this $26 level. So that may act as a magnet for price action in the future, that $26 range. I think what you can do here is go ahead and buy some of this, waiting, and then use a stop loss that's below this $26 level, or you can just wait for a pullback if it does pull back, sort of this $26 level, and that might be the play here, because the thought here is that, oh, it broke through 28. That's definitely going to provide support. I'd like to see it come back down and test it a little bit. That could be an area where you could buy, but I think that a little rope-a-dope action might be in order. And what's causing me to think that is this volume here. So you got so much action down here. I think it will act as an attractor for the price should it retrace, and then you can buy at a much more favorable level. But talking about money flows, look at the huge positive move since May. Lots of volume and lots of buying here in shares of Ternium. That's ticker TX. All right, everybody, that's all I got for you here today on Dave's Daily Dive. If you're on Twitter, better get connected at Bartosiastics. That's BARTOSIASTICS. And of course, you can check out all of my content here on Zacks.com. So I hope to see you guys back later on in the week for another one of Dave's Daily Dives. Have a good one.